Hello, 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 everyone. Welcome back. Third live stream of the day. How is everyone doing? How is everyone doing? Hope everybody survived the day, used your stops. You got to use stops in these kind of markets. We had the double play out. If you didn't watch the midday update, we were on live. So, again, how is everyone doing? It was not a Black Wednesday. Be careful with using the term. If we were in all-out crash mode with halts, it would be a Black Wednesday. We're not. Okay, like Black, you want all-out crash mode. This was just very orderly selling. Don't throw around Black Mondays, Tuesdays, Wednesdays, Thursdays, Fridays, willy-nilly. Again, you just said it. S&P closes down 4%, worst day since June 2020. Did we have a black whatever day in June 2020? I don't recall people calling that black. It's when we're actually in full-blown crash mode. This was not full-blown crash mode. We would have been halted. Okay, this was really orderly selling. Willy-nilly, yeah, you cannot willy-nilly. It was red. I was just going to say that. Lauren, you know me too well. It was Red Wednesday. It was Red Wednesday. I don't see any black on here. I see TJ Maxx tried to hold the markets up, as I said at the lunch stream, but it couldn't. Now, if you take off TJ Maxx, it could have been black. No, I'm just kidding. This is a lot unwinding. Hold on. We're gonna get Bob on in a minute. So, again, if you missed the live stream at noon with me updating the levels for everyone, you missed out, and it's probably because, let's see, I can't find my buttons. That's how bad today was. I can't find my buttons. So you got to consider subscribing, ringing that bell. Very important to ring that bell. So, and you should probably join Discord for the nominal $10 fee, just so I punched in there that I was going live. And again, let's bring on Bob's take first. Let's just get straight to the Bob. I'm going to hit the magic Bob button. There we go. You didn't even know he was going to show up today, did you?
Got to show up on a day like this.
What? Why?
I guess I really don't have to. Did we put up retail sales adjusted for inflation yesterday or no?
Yes.
Okay, so negative. So we talked about that.
Yeah, we talked about the negative.
I came on yesterday in the morning. Waka Waka was right. I came on, yes, although it could get blacker. I don't think I'm allowed to say that.
Well, I just went on my rant. It's not a Black Wednesday. It was very orderly selling. This is not a full-blown crash mode. This was complete orderly selling, and we did not halt the market. We had no circuit breakers hit. I'm tired of people throwing around terms like that, like every time we have a sell-off, because that's like reserved for when we're in full-blown, people are jumping out of Windows mode.
Well, I'll give you an example. How about this? This is the largest single one-day drop in 2 years.
Yeah, see? That's nothing.
Lowest closing level since March 25th of 2021. Largest single-day drop in the S&P since June 11th. Not even a full 2 years.
I know. See, we can't throw out these terms. You got to reserve them for when we actually have one of those.
So I just want to touch on something real quick if I could. Mike, I texted you two charts. I don't know if it's possible to put those up at the same time or not. But when I talk about my thesis of why I think the Fed is going to lose their nerve, Patrick Harker, again, talking about 250 basis point rate hikes. Okay, 2 more. Jerome Powell did the same thing. Okay. U.S. government debt in the beginning, the first 5 months of the recession that followed the 2008, the start of the recession, right? The first 5 months, U.S. government debt rose by $1 trillion. U.S. government debt in the last 5 months has risen by $1.5 trillion. We're not even in a recession yet. So what does that mean? Well, The government now has to service debt. If you go to the beginning of that little rise there, so right around December, you had a 2-year note trading right around 1% yield. We're now at what, 270 as of today, or 268 as of today? Where was it? Closed at 268 today. 30-year 306. If you were to go back to let's call it the 5-month anniversary of today. Okay, so let's say you want to go back to January 18th. The 30-year on January 18th closed at 218. It's 308 today. So that means the government, and by the way, we're not even in a recession yet. So that's likely to spike higher, right? For several different reasons. Tax receipts falling, borrowing programs to try and spur the economy once we're in a recession, et cetera. So we're already 1.5 trillion past where we were in the increased government debt during the 2008 recession, the beginning of 2008 recession, and yields are double in the case of the 2-year and about 100 basis points higher, 90 basis points higher in case of the 30-year. So across the curve, it falls within that. And those are the levels that the government has to service the debt. So how much pressure do we think is going to be on the Fed to stop hiking rates? Now, the thing that the idiot politicians don't realize is that won't lower the whole curve because inflation will take hold and people will be demanding more yield on the longer end of the curve because of inflation being sticky. So I wanted to point that out because it has quite a bit to do with my thesis of the Fed backing off after these next 2 rate hikes. I'm going to say it's these next 2. I wasn't willing to say that before, but I think 2 more 50 basis point rate hikes, and then the Fed is going to say now we have to wait for the supply chain to ease up in order for inflation to pull back more. So there's some background on my theory.
So if we have inflation like stuck for the next year at like 6%, what happens?
I mean, stocks are not a buy, even though stocks have usually rallied during inflation. And okay, so let me rephrase that. When the Fed stops, gold, silver, Bitcoin will be a buy, and possibly stocks as well, because you'll want hard assets. So you'll want real estate, gold, silver, and Bitcoin. I mean, for as much as you can call that a hard asset. If they haven't regulated Bitcoin away at that point, that'll be another spike for Bitcoin when the Fed stops doing that. Now, stocks can follow that because they are considered a hard asset. But I'm going to hold off on that until we see more data on what the earnings actually look like.
Okay. Well, there
That's
we
it.
have it. There we have it.
I'm seeing no questions for me, so unless there is one, I'm going to go.
Anything here? Quick. This should be addressed. Adil Muhammad, guys. One suggestion needed. I am big loss now, but I'm still putting money. Can you please suggest what will be the end? So I do I stop putting money? I took buy positions at 12.7 in the Nas.
Oof.
Uh, do you have any comments on that?
I mean, when the Fed stops cutting rates, so the bottom to me comes when the Fed starts implying that they may slow down on cutting rates. There was a tiny bit of that from Raphael Bostic. I thought I saw a little bit of it from Patrick Harker today, but the market didn't seem to think so. So Adil, it's literally when the Fed starts saying that, okay, they've done what they can do, because again, some of the inflation, if not most of it, is out of the Fed's control, but yet we're still going to have inflation and rates being. It's interesting because the only tool the Fed has right now, Adil, is the wealth effect. They need to stop the wealth effect in order to slow down demand. Now, in a weird way, people don't believe in trickle down economics to the upside, but they believe in it to the downside, which is basically what the Fed is trying to do here. They're trying to harm people who own assets, literally harm them. And I don't mean that in a provocative kind of way. They're trying to harm the wealth of people who hold assets so that they'll stop spending, stop hiring, and this way it trickles down and slows the whole demand curve. It's the only tool they have. but they can't do anything about the supply chain. They can't do anything about energy. They can't do anything about food prices. So it's a very interesting thing that they use the wealth effect for that, because that's trickle down. And a lot of people don't believe trickle down works. I do believe it does. I believe the evidence is there, but whatever.
So if you're already in a big loss, I mean, I still expect more downside ahead.
I do too.
So, and see, this is when people ask me this. I'm already down 50% of my portfolio. I say the answer I hate giving is I wouldn't be in that position because I use stops.
Right.
So what do you do? What? So I've not been in that position, but what do? I use any rallies to get out of assets that still have a lot of area left to fall, like incredibly high PE assets that have somewhat hung in there, more so stuff that has yet to unwind. When we see Apple and Microsoft really start dumping like Walmart and Target, then we'll be closer to the bottom.
Yeah, I mean, I really don't. So I'm taking that to mean, Mike, and I don't know how you're taking it, is that his average price is around 12,700 in the Dow.
Or he's added. We need clarification in this. So we can't give. I'm going to say this also. We can't give specific investment advice. We're not your portfolio advisor. We're trying to give general advice to people. If your average is around 12,007.
I don't see it going too much higher than that.
I mean, that's the problem, because
that's like the top of the rotation zone, Mikey.
I mean, you'd have to get that a pretty good medium-term rally, because even on a major medium-term rally, could we get back to, like, assuming we don't make new lows, which I think we will possibly by next week. Right now, the hooking over, let me get to the, you see here, we have the, let me go all the way up here on the NASDAQ. Could we get back to theoretically a 14,000 medium term before we take another huge dump? Theoretically, what would that percentage be? But here's where I would, let's even say back to the 200-day. That would be a 27.6% rally from the current lows. Could it happen? Yeah. But on any rallies, long-term assets that you can that you don't want to hold, I would be unwinding personally. And things like
also,
what was that?
Go ahead, Mike. No, go ahead, please.
You know, there's stuff still consumer discretionary. I wouldn't be in right now. Stuff that has good PEs. All right, I'll give you an example. Stuff that I'm getting closer, even though I don't love it yet, but I'm getting closer to, hey, we may be putting in a long-term, closer to a longer-term bottom. Like, I wouldn't be dumping my Netflix right now. Like, if I rode this down, which I didn't, but, based off where the PEs, they're finally doing layoffs, they're going to get some more stuff in order. Yeah, it's got some more downside, but it's out of the bag. It's getting closer to a bottom than to a top. But things still like an Apple position, I still think Apple's going to get back to a 16 PE. And just on a technical point of view, back to closer to the 200-week moving average, which could take it back over the next few months back down to 100. They're slashing phone orders and everything else. We could easily see Apple. This is not unwound yet compared to a lot of other names. So, like an Apple, I'd be getting out of sooner rather than later. Stuff that's already closer to those lower PEs. And when I say PEs and price to sales and all these other metrics that have been ignored for years, really start to matter in recessionary environments. Because that's where I want to see them be dialed in, and then there'll be longer-term buys. So overall, that's where I go through your portfolio. And, and if you're just in the NASDAQ can take a lot more hurt than a lot of other stuff, just because a lot of the tech firms were so dependent on cheap capital. And capital, even if the 10-year draws back a little, like closer to 2.5% or even 2%, it's still not cheap capital that they were used to when it was virtually free. So that's my longer term thing. But again, we have more downside from my perspective and from what my longer term systems show. So rallies I would use to unwind positions that you don't want to be in a nutshell. Any other thoughts, Bob?
Yeah, I was going to say that, the medium term bottom that I'm calling for, obviously, I haven't bought anything yet because I would tell you guys, but there's been no bottoming price action. So I want to continue to stress that, until I see some, as a matter of fact, for an example of like bottoming style price action, not a buy signal, but the style price action I'd be looking for, put up the yen daily, the futures chart. So it's 6J.
Okay, you want the futures?
Yeah, the 6J chart.
Oh, hold on. I can't. I have to do this, and then
Yeah, you have to do it from there. And then choose the continuous, which is right there. Click on that.
Yeah, if you type in the 6, it takes you. You're changing interval first instead
Exactly.
of.
So go to the daily.
You little double.
Yeah, that's bottoming pricing action. It doesn't have to be a bottom, of course. But as we continue to weaken, this is not developed in the equities at all. As a matter of fact, the three majors, so everything except the Russell, all had new low closes for the year today. S&P, Dow, NASDAQ, all new low closes. The S&P is now 1.4% from closing in bear market territory. The Dow's still about 5% away. But I did a TD Ameritrade spot today, and I put it up on Twitter. And in that, I said, you have to ask yourself, is the S&P and the Dow going to be strong enough to pull the NASDAQ and the Russell out of their bear markets? Or is the NASDAQ and the Russell going to pull the S&P and the Dow down into bear markets? Because while they're not correlated at 1, historically, the S&P and the Russell have a 0.96. So it's not quite 1, right? They can go, one can outperform the other is basically what that means. I told them that I thought it was going to be the NASDAQ and the Russell pulling down the S&P and the Dow into bear market. And I still believe that. Just by virtue of people thinking those terms actually matter as targets, you might get a bounce when the S&P hits down 20% on a closing basis. I'm not necessarily going to buy it there, but we saw it with the NASDAQ.
Yeah, and that could be a super short term trade again. You can get these rip your face off rallies. We're still going to get them before the overall bottom's in my perspective.
Right.
And then, unless the Fed steps out of nowhere saying we're canceling all hikes and we're doing quantitative easing again, then we'll probably get a V-shaped reversal, and then it's off to the races.
Right.
So, that's the only caveat. You generally get the V-shaped reversals when you get the quantitative easing, when there's money being injected into the system. Because it's not one of those bottoms that has to build over time. It's a artificial bottom due to stimulus or some kind of other fiscal injection.
Right.
So
anyway, that's it.
All right.
All right, guys. Talk to you tomorrow then.
All right. We will see you tomorrow. Thanks for jumping on, Bob.
See you guys.
All right. There we head. Is it Bob? That is one ugly bar. We should have been prepared, though. With that potential double, now it continued lower, and the targets played out pretty well this afternoon. Let's just go through stuff in order. Though, since I thought it was important, we got Bob's take on stuff whenever he can jump on tomorrow. Jobless claims minor. I'm really actually focused on a lot at 7:30 with the Fed Philly business conditions, especially prices paid. So that could be potentially moving there, and then we have the existing home sales, and then other than that, it's pretty quiet the rest of today. Again, here's your red. Here's the blood in the streets map. FOMC still 90% of that 50 basis point, which is still, we are still in negative gamma territory. They were having some issues with their site. S&P, earnings. I know Cisco got smoked after hours. Tomorrow, not a lot earnings in the morning that's going to be market moving, but I will see what happens with Kohl's. So that's where we sit with that. Where else do we sit? Let me get back to some comments. I wasn't ignoring people. I just thought it was important with Bob. In all my days trading, I've not seen such orderly selling. It was very orderly selling. This was not crash mode. This was when you see this. Look, the waves coming down. This was just orderly selling. And it's continued. Here was the end of day, by the way. Here's the end of the day, and then it pushed down right to this next harmonic cluster, and now it's just below that, trying to bounce back up. NASDAQ was really nice, though. Here was the end of the day, and then it dips down at the very end. But we got the closes. Now, with these closes, still expecting the new lows. Could we get some kind of little rally back again tomorrow or Friday? Yeah, because of the options expiration and especially that 4,000 pin. Could we even jump back to 4,000? Easily. So do keep that in mind. Not saying that's going to happen. I don't have a strong reversal pattern yet, but even if we got back to 4,000 the S&P, let's just say this is near the lows, we're only looking at a 2% bounce back move. So, and again, this favors the close below the 62.5. Now favors the retest of the 38.85 to 38.56 areas. So another rotation back down. Overnight, what am I watching? The only thing I can really pay attention to, let me take off these levels for a bit because I want to reverse them. And then I'll get to some more comments. Really, I'm focused on, if we do have a bigger bounce, about 39.52 with the declining 1 hour rotation zone. And that would really be a break above about 39.32. Going to watch how that transpires in Europe and Asia. The next lower level is 38.81 and then 38.58 to 38.53. What Bob was also talking about, based off the closing basis here, you can see this is the new close in the S&P, and that's a new close since we've got back to all the way back at March of 21. So over a year ago, we're at a new closing low. Let's just check the NASDAQ while I'm on this chart. So this is the new closing low since back in November of 20. And that's pretty ugly. So, a lot of people are now really underwater. And we can get more underwater. All right. I think we're still getting institutional rolling out of stuff, and still the Joe Blow based off even ARC inflows is going to be the long-term bag holder, like generally happens. Good day to wear shorts. Well, not for here. It was cold and rainy here. 90 when I'm doing mulch. Today in the 50s and raining. Go figure. But that's a funny one, Ken. Let's see. Waka Waka, you killed it. Glad you killed it. Not even a small pop. No short covering. No, not really into the close. Just a minor little stuff. What else do we have? Where do we have? Hey, David. Hey. Are we going to have now you're calling for Holy Moly Thursday? What's holy moly Thursday, Waka Waka? You got to define some of these terms. Is that holy moly we rallied back, or holy moly we just took out recent lows? Yes, correct. It wasn't a 10% drop within minutes. So we're going to have to come up with a new term for your black days. They could be, I don't know what we. When I say nuclear, nuclear. So if we have nuclear Thursday, that would be bad. But holy moly Thursday is not nuclear Thursday. Hey, ancient astronaut, welcome, welcome, welcome. We already went through that. Let's see. No way QT and inflation needs to be high for a minimum of 5 years to kill it. You know what put the end to me today? You know what did it for me? Costco, the price of their hot dog and soda that's been $1.49 for so many years is going up due to inflation. And look at Costco getting brutalized. Even Costco. Now, once they raise their prices on the rotisserie chickens, it's all over. Then they were probably going to be close to the low. So when Costco announces price increase on rotisserie chickens, we're probably close to the low. But that's an ugly chart right there. That is a very ugly chart. Where's Costco's? But see, here's the thing. I tell you, PEs matter. 39.55 on Costco's PE, all right? We had to sell off in Target. What do you think? At least Target's back to 15. Can it go lower? I'm expecting it to go lower. But this is getting a lot more reasonable than things like Costco. And as I said when Bob was on, PEs and all your price to sales and all your other metrics that people have been ignoring start to matter when we get into these kind of markets. So 39.55 versus 15 for Target. Walmart, see, does Walmart still have room to drop? 26.94. I'm expecting Walmart to continue to drop. Rallies are to be sold. Where else do we stand? So NASDAQ, let me jump back here and get to some other levels to help us out overnight and tomorrow. All right, we're closed below. We're easily. Yesterday we closed below that. We closed at 4 hour below 62.5, and of course the daily back below there. I'm still watching for if we sell off 11.8 to 11.697. Then what are your next targets lower? Should we blow through those overnight? Let's see. We got to go with the reverse harmonics. 11.576, 11.462 on any bounce play. Since you roughly know where those are, I'm reversing the harmonics to give us an idea. And I'm just seeing where this pausing gives us that 11.77 then the retest of the lows. Just want to see where the forward harmonics go. But since we're so far extended, and remember I said we were into a clear path move and you started to see it just unwind. When you get in these clear path moves, you got to watch out. Above 11.59.54 on any bounce, 12,041, 12,000, 12,050. I'd go 12,000, 12,050 would be any key resistance. Here's your Dow. Again, double. And then just unwinding through the harmonics that I showed during lunch, not even pausing there, and then coming back down. Coming back down to the 87.5 from this run-up. So, what do we have for tomorrow in the Dow? Continued down move would be the lows from back on the 12th of May, which were about 31,150 to 31,125. Below that, you're looking at about 39.51. Where do we sit with any rally right now? We just clear up some of this stuff so we can look at the pictures. On any rally, roughly, this isn't as clean as the other one yet. It's pretty clean. Above 31,480, which is 12.5% harmonic in this little resistance base, the target would be 31,650. So that's where we stand with that. Let me see. I love the macro analysis you get on this channel. I'm glad you do NASCAR all out. Glad we try to keep many different levels on here. It was 1969. It was up and down for 10 years. Yes, it was. And I'm expecting overall, even once we put in a longer term bottom, we could get some very interesting conditions. I agree with you for the next while. Let's see. NASDAQ trying to bottom out, and other Fibby and other metrics say we should be done with the selling, so might get a chance to get out. We shall see, won't we? Where are we sitting? Hey, Dan Jet. Again, we need a longer term. We got little bounces, but for a medium term rally, we need a medium term bottoming position. Okay. And we don't have a medium term bottoming position yet. I mean, look, we got at least we got a 3-day rally off of this one. Boom, boom, boom. 3-day before the rollover. Last was, that was sort of neutral, but 2 to 3 days, 2 days. So NASDAQ, we got, I'll call that 2.5 days. But this is weak. Let's take a look at the notes. Okay, back into the 50 to 62.5 with the rotation back up. Start getting a lot pretty aggressive on 120.01. Remember, you can have now, yields are now dropping on the notes out of, there's the good kind of drop and the bad kind of drop. This is the bad kind of drop because it means weakening financial conditions. And here's what we were talking about. I haven't seen Raj yet. Is Raj on here? I haven't. Oh, there we are. Let me get to Raj in a second. He was asking, what do I expect? I was looking again at 10-year. He asked this morning, 2% or 4% first, easily now 2%. Why? Here was my macro analysis. I just want to touch on this. Even if we do push higher, I'm expecting 2% is, look, it's based off of this. Here's the monthly chart. Here's the monthly rotation zone. Here's the month of this run up. That's only slightly below the 37.5. That doesn't even take us back to the 50%, which takes us back to 1.7. So this is an easy one for me to answer at this point after doing some macro analysis. I think we're going to see 1.7 to 2% easily before we see 4%. And we have this potential head and shoulders in the short term. So we could even see back to about 2.4 to 2.45 to about 2.47 before that. All right, VIX. Let me jump in at the VIX and I'll get to some more stuff. VIX did not close above the 62.5. So let's see. That it bounced off of it, but did not close above it. Again, leaving us in this nebulous territory because statistically now it doesn't. We don't have the statistic. It's still in the rollover zone again, so tomorrow will be interesting. I don't have any strong bottoming patterns just yet. If we got a strong, now I'm not expecting, we do have a potential double bottom, by the way, in the NASDAQ and the S&P are in potential double bottom zones, but we need a really substantial rally. So could we theoretically come down here, even make slightly lower lows next week, and then put in a medium-term bottom? Yes, we could. But that's a long way off, so I'm just pointing that out. Waka Waka China report out total factors produced. Yes, Apple dropped after that. By the way, Apple, just for the point of completeness, this is why you use stops and nothing works 100%. Double bottom is over, at least on the shorter term time frame. Do you have a larger term time frame double bottom? Yes, but that's not triggering yet. So we'll take an eye on that. But that shorter term one was stopped on today's price action. By the way, just for also point of completeness, longer term, I'm expecting Apple to easily trade down easily to 117 to 120. Would not be surprised to see it hit back to 100 at all. Let's see. Ted, you and Bob make a great team. Nice partnership. You balance each other out very well. Thank you, Ted. I'm glad that we both have different strengths, so that is nice to hear. Cisco in 100 years might hit 1999 target. Yeah, and there's people, I know people that are still holding. I've talked about this before. It's why you want to use stops. You want to use stops because you don't want to be having money tied up, trying to get back to break even for 20 years. And now it could even be longer, 30 years. Rich is throwing in the towel. Stock market's dead. Terrible earnings. This market is a joke. Rich is throwing in the towel. All right, we got the holy moly rally up, Waka Waka says tomorrow. Holy moly rally up. Well, can you define that in percentage, Waka Waka? Roblox held up nicely. Yes, it did. Yes, it did. Still basing. So, you might have a nice little, if the market does rally, could be a little breakout play on Roblox above 36. A breakout play above that. 4, if it holds up, it's right against the weekly rotation zone. You got divergences and cycles turning up. So you might be able to get a little pop play out of that. Where Rich, oh boy, Rich, depression is coming. I think we're going to be into a much more severe recession. Could we hit a depression? Theoretically. Was waiting for 100 points range, but we got bonus down range. Waiting for 100 points range in what specific? You got to please be specific so I know. Rich is 1930 all over again. Oh boy. Oh, your LOL Tesla PE? Well, this is Tesla PE is still 134, and if they have slowing car deliveries in Q2, this you could see. This is going to, again. I've told you. I've talked about my price targets based off fundamentals in the past. We're finally getting the unwinding, and it's a lot of people are going to get. It's going to be very ugly for a lot of people. 10,600 price target reasonable short-term bottom on the NASDAQ, or is that too extreme? Boy, we keep 10,006. Yeah, that's right. You got this, all in this area can be a bottoming pattern for even a more substantial rally. Even 10,450. So this is a pretty big zone that I'm watching anywhere in this zone. And then you have some stopping points in here. So no, it's not too extreme. Do we have to get there before we get a medium-term rally? No. But for a long-term bottom, we could easily see that before we get a long-term bottom. And remember, even this rally that we had back in March, that seemed like it was relentless up. We could easily get something like that again. That was 18%. So, but there's no signs of that unless we trigger this double bottom just yet. Thank you for the super chat, Lions. Really, really appreciate it. Another wonderful member. Mike, if this keeps up, everything will have a PE under 5. No, not everything. Your NASDAQs generally, could some things overshoot? Yeah, but NASDAQs generally don't get a PE unless there's some stocks that are just getting destroyed. But, could you see Netflix even drop to 12? Yeah, but there won't be a lot of NASDAQ stocks in the 5s. Certain stocks will be. Like auto manufacturers will even go lower than that. But especially if we have a pretty severe recession. But NASDAQ, bottoming will bottom higher with PEs more so than the S&P. S&P could go, we could see some good bargains in even the $10 or $8 range. It would take a lot to get a lot of PEs to 5 though. Oh, they didn't kick him out of the S&P 500. They kept him out of the S&P ESG, the ESG index. He'd be even more pissed if they kicked him out of the S&P 500, which I'm waiting for at some point. Well, that is the point, and I just warned everyone on Twitter, but they just say I'm mad. You don't want to get in Twitter fights also around Elon, trust me. Oh boy, there's a lot going on in the Elon world. By the way, let's peek in on Twitter. I know it hit the second target of the double. Let's see if the third one's in order. I'm really curious. I am curious. Usually in bear markets, PEs in low 1 to 10 or mid-teens with massive growth. Yeah, again, we can see mid-teens with some stuff in the NASDAQ. One, you have to be some very special stocks. 8 for at least standard S&P stocks in bear markets is generally good. Can things, if we have an all right out, if we start getting Waka Waka's black mode, can we get stuff even lower than that? Yeah, theoretically. But, even though when you get to 8 to 10 range on a lot of S&P stocks, it's generally, and you get bottoming patterns, it's a pretty good area to start going in. Hey, Raj, welcome back. Thoughts on ag stocks? I mean, everything pulled back today. Ag stocks were still in. Let me get to. Oh boy, just had a brain. I don't want to call it a brain fart. I did not have a brain aneurysm. There it is. DBA. Ag stocks, I think they're still going to be strong, especially going into the overall things. Again, you're going to get, when you get markets like this, you're going to get selling just across the board. So things like CF, again, bouncing off the 50% level on the daily, I'd be watching for some shorter term bottoming patterns. I wouldn't just jump in now. Where you're into a potential area, you can watch for something. So if you did get a bottoming pattern, but I'm still bullish on these things. I'm still bullish. Don't have a strong bottoming pattern yet. Could trade back down, fill this gap easily if we get more market weakness. On a bottoming pattern, I'd still be looking to go back into something like CF. What else are you listing out? NTR. You were still in long-term bull mode. NTR. It's in a sort of a nice flag pattern here with a longer-term pullback. NTR. Let me just get on this last little run up. NTR, let's just check the weekly. We've already come off the weekly rotation zone at the 50% level of this run up. You start getting a push above 104.57, I would watch for another run up. What gets it in a really bullish mode again? I wouldn't be afraid to keep playing these with some decent stops to the upside. It gets really bullish mode. You get above 107.89. So these are just some corrective patterns within a longer term trend. You see it got overdone, pulled back to the weekly, now trying to get some rotation back up, but you just be cautious until this market stabilizes, because a market like this will bring down everything. Everything. You saw it today. I mean, where am I? We saw it today. When you see a map like this, look, there was pretty much nowhere to hide unless you were luckily in TJX from earnings. There was nowhere to hide. There was stuff that you avoided some damage, but there was not a lot of places to hide in this. So that's what I'm telling you. When you get markets like this, where there's just relentless selling, you you stand aside, you watch for the bottoming patterns, and these things longer term is still DBAs in full blown bull mode, getting the pullback. So no problem taking these on with stronger rotations back up. MOS. This one's a little tricky. It's still in the rotation zone, but it's also triggered this head and shoulders, which is still valid. This would be the last one I go to. This would be the last one I go to unless it can really get a move back on upwards. This, because it's triggered a longer term pattern. This little double that triggered didn't even get to the first target before it rolled over. So this would be the last thing I go to unless it could get back above about 70.40. So that would be the last thing I'd look at. I wonder who you're talking about, Waka Waka. Oh, Elon's a psychopath. Oh, boy. Oh, boy. He surrounded himself with the yes people? I agree. Down, up, down, up. Tomorrow will be up. All right, Cal, we've got Cal's prediction. Tomorrow will be up. Seriously, 20 years and still hold. Oh, where are we? Where are we? What are your thoughts on longer-term bear plays via options? Longer term? Once we get a new... Everything's short-term for me. Everything's still short-term until we get the medium-term rally. So everything is short-term bear plays for me, which can be even week, 2 weeks. But until I put on a long-term bear play, again, another long-term bear play, I need a little more substantial rally in here because we will get one. I'm thinking bear put credit spreads on Tesla in last... Well, at the... Yeah. Bear put credit spreads. Bear put credit spreads. Huh. I'd have to think about that a little more. It all depends on volatility. I'll have to think about that one. I mean, if Tesla breaks, once Tesla does break below, we're getting here again, but if it really gets below 642, then I'd be targeting about 488 to 500 easily. Do I want credit spreads or... I mean, you could do... It all depends on volatility. I mean, I'd be willing to sell some call spreads for credits, especially on rallies. Especially if we keep at a higher volatility with that. Put spreads, you could do it on at key levels. Like if we rapidly sold down to 637 to about 650 and volatility spiked, there might be some interesting selling put plays to take in some credits with a volatility play unwinding on a little rally. Because will we get to... I mean, unless something major happens with Elon, that's all risk with this now. With the Twitter situation, I've told you he's been under formal investigation for many, many months. He's just teeing this up with all his Twitter stuff. They're going to come after me politically. He's been under formal investigation for quite some time. This is not just new. He's a master manipulator and very good at teeing up people to get them to side with him. So now he knows, since it's a Democrat people in charge, he's going to try to tee up the Republicans to defend him, which they were with this free speech takeover of Twitter. But a lot of people, unless you've studied Elon, he's just the ultimate master manipulator from my point of view. He'll manipulate whatever he thinks will get him his outcomes. How would you place stops for shorting the 62.5 daily close on the NAS ES daily? How would I put? Well, all right. If you're shorting these, let me get back to the. If you're shorting something like going down, that's where I reverse this. So what would, unless we got above about 40.23 based off of this, I'd still have to keep any short plays in position now. Since we closed below the 62.5 on the levels I took off already, any short plays, because even on bounces, look, we have that potential 4,000 pin. That just, look at this. Look at where it sits. Let's say tonight, let's say right now is the low and we get a bounce even Thursday, Friday. We get a Waka Waka's holy moly Thursday bounce, and it continues into Friday. Look where the 50% level is. Back to 4,000. Look where the 62.5 is, 4,023. Could it easily come back up here, pin it on Friday, and then roll over again next week? Yes. So my stops would have to be above this 62.5. On the S&P, on the NASDAQ, it would be above about 12,325 for any shorts. That's how I like to do things. Other than that, I can't play tighter stops on this with it. You can with day trades, but swing trades you can't because of this volatility. You have to be super right on. If you really want a tighter stop, you have this breakdown zone on the NAS with the rolling over 4-hour rotation zone. The problem is that's the 50% retracement levels from the lows set today. So could this bounce up here and then roll over again? Easily. That's one of the challenges is in tactical trading environments with a lot of volatility. You have to be spot on, or you have to use smaller position size, which is not what I like doing. I like smaller position size, wider stops. Why smaller position size? Because I can still use the same risk with a wider stop and letting it play out. Because tight stops in this environment are hard. NASDAQ 7 to 15, not all tomorrow, but this week. So now you're going to 7 to 15% rally. Not all tomorrow, but this week. Where would that take us? I'm assuming from these lows or the close. 7 would take us above this high 15. See what's interesting. All right, let's just go. Let's hear what Waka Waka has to say. Let's go to 15. So 7 to 15. Let's just go off these highs to that. Now, if you did trigger this and these were the lows, I just want to map out. The double, let's even go with the aggressive. The double could take us back to 13.5 for full targets. If that double plays out, would take it back to the 50 EMA and back to the highs back at the beginning of May. If that were to play out, I'm just going off the close, that would be a 13.8% rally. To the first target, you'd have a 10% rally. To the top of the daily rotation zone, you'd have a nearly 8% rally. That's a pretty wide rally range, though. So I'll just map those out. Now, if you make overnight lows, those targets are going to have new lows, and those targets are going to have to be adjusted. But I might as well put them up there now since people would like to focus on them. But see, that stop level I talked about before, you'd be well stopped with any short positions before that double even triggered. So you got to be willing to take some risk with the volatility. Now on the S&P, if that triggered, let's just see where we sit with that one. To the trigger point would be about 5%. To the first target, we'd be about 7%. To the full target, we'd be about 9.7%. So is it possible? Yeah. Options expiration to me says too many shorts need to be killed. The only thing, you have a lot of call open interest still there, Waka Waka. You got more put open interest there, but you still have a ton of call open interest. All right, so it can get interesting. But look, you got the S&P open interest at 4. And I'm just going to use not the SPX, I'm just going to use the futures at this point. But that just takes us back into the 50 to 62. What percentage rally would that be from here? I mean, let's just go with a 4 pin. Let's say they try to pin it and destroy both sides. Because that's interesting. You get a pin at 4K, you destroy the puts and the calls because you got to have a longer term view with what to do. That would just be a 2.4% rally. I'd be more expecting that, but that doesn't even tip it back to that doesn't hit that stop level I'd be watching. Hey, Wizit, how you doing? Glad you're here. Can you please look at Monster Drink? I don't trade Monster Drink. I mean, from a fundamental perspective, I'd be watching for a bigger pullback. From a technical perspective, that was, oh, look, that's just, you filled the gap too off of that. That one's in a tricky position because statistically you just barely triggered the close above the 62.5. You filled the gap. As long as it pretty much holds above 82.52, you almost have to just go with the long side with a stop below about, I'd go about 82 with a stop below 82. But you have cycles rolling over. You're having coming out of overbought conditions with a divergence. I'd probably keep a tighter stop on that, even about 80.58, 80.60. You get on a closing basis. That's in a really interesting position because it went back to the 200-day. So if I was already long from lower prices, I'd just be running a tighter stop at this point. If I was looking to get long, I would not do it unless it got back above 90.23. If it got back above 90.23 on a breakout because markets strengthened, then I'd play it for a run to about 95.30. That is a good buy on Twitter if Elon's forced to buy at 54. Yeah, I don't. Yeah, would see the interesting thing is I don't think this is going to clear up anytime soon with Twitter. Because they could say, we're going to sue you. He could say, go ahead. You want to know how long that's going to take to resolve? The other interesting thing is the only out he really has if he can't get financing, and if the stock price in Tesla were to collapse, there's no way he'd get the full financing to pay for the deal. So he could try to, I mean, theoretically, all right, Tesla goes down to a bunch. That could actually work to his favor. That could be his only. He has no out based off the bot thing. No out. Will XLE to continue to pull back? Well, XLE is still in bullish mode, longer term. We're getting this was just a pullback with sell everything. And it was sell crude today. I talked about this at lunch. Pretty much, there was a huge draw on crude. I got to stay with bullish mode in crude. I can't go super bullish mode without that close above the 62.5. but I can stay in bullish mode on pullbacks for right now. So, and XLE is still in long-term bullish mode. You just have to be watching for those pullbacks for the time being. I'm at Netflix. Then I'll get to a couple more. Then I'm going to wrap it up. It's gone over an hour. Netflix. Netflix pullback today. What I'm watching for with Netflix, you still have this gap right here. I'm watching to see if we get a double on Netflix back below. It's still above the 62.5 of this run up. So unless we get a strong rotation up here with a strong rally in the NASDAQ, it's really not much for me to do. I'm just looking at the shorter term charts. It's in no man's land right now. I'm watching to see if we put in at least possibly a double bottom back down around these harmonics, and then could be a play, especially on a if we get a nice double, then it's definitely in play for me with a medium term NASDAQ rally, because we could easily take this back to I don't want to map it out just, these levels don't count because we don't have an official double. But where would I be looking with the aggressive targets? Even you could get back to 230. Theoretically, we don't have that pattern yet. So that's my longer term thing I'm watching for on Netflix. George, Waka Waki Raleigh, no way. 15% more down by close on Friday. I'm calling for buy one stock, get two free. Which stocks do I get for free, George? Which stocks? Rich, I'm on the same page with you. I'm on the same page. I think within the next little longer medium term, we're going below that easily. You guys are full of good news. Wavy, the first monkeypox case of the year has been identified in Massachusetts. Fantastic. Fantastic news. Thank you, Wavy. I love this back and forth. Elon busted his main car buyers as woke people, Democrats. Yeah, that's going to work out well for him, too. Is Elon just on the path to blow up everything? Elon's all about Elon. Don't forget that. At the end of the day, he's on nobody's side. Elon's all about Elon and maximizing Elon. He will change sides every which way, especially with the walls closing in around him. So don't forget that. All right, let's hear Wavy's prediction. Here's my prediction. Elon gets a massive fine from the SEC and barred from being on any board, forced to step down as Tesla CEO. Well, he could be banned from not just any board, but also from any leadership position. Even so, that could get very interesting. Once Elon leaves Tesla, it may end up in the double-digit range. Personally, I'm targeting 420 by the end of the year. Why not target 69? I mean, it could be double-digit, you said. Target 69. What's interesting is if it's traded as a car company and we go into a recession, where car companies trade in recessions, you could see 69 as a price if everything unravels. Hello. Late to the stock market tank party. Well, welcome, Bobby K. Glad you could join it. Didn't even know Monster had a ticker. Yeah, well, I've never traded Monster. You're welcome, Wizit. The stock market becomes a shock market. You guys are, wow, we got Mr. Cardboard Cardboard Box Waka Waka shifted to major bull mode after being Black Wednesday. You got other people. Rich becomes a shock market. SQQQ, when I looked at it, PM showed a $100 pump up. It said market was going to dump with the RSI, the invoice. Oh, it's buy one Tesla, get two ARC free. I'm passing. If I have to buy one Tesla to get two ARCs, I am passing on that, guys. But ARC. I did not look at ARC today, and ARC still has not filled that gap. Wow. Are people still buying this crap? I'm actually surprised at that. You may be closer to a medium-term bottom than not. Today, SEC applied more funding to combat buybacks, insider trading, and rogue traders. How do all those things fit together? And how do you combat buybacks? I mean, I'm not a favor of stock buyback, companies spending a ton of money to buy back their stock. But how is that how do you combat stock buybacks? Now, insider trading is very different from stock buybacks. And rogue traders, what's a rogue trader? Like a Bill Long? Is that what a rogue trader is? I did not see. Well, CNBC is a garbage network. Don't even watch it. XOP. XOP, it hit the first target on the double. I would still, it's nowhere near the stop out on the double. So I wouldn't, it's just a pullback with everything else getting sold today. Again, some of these energy plays, we're still in long-term energy mode. Could energy roll over? Sure it could if we go into a global worldwide depression / recession, but that we could still rally more before that happens. I got to go with the long-term plays still, which still favors even with pullbacks upside in energy. LOL, you couldn't give ARC away for free. People are still paying for ARC. There's still inflows. Love seeing everyone. We will recover. Everything will recover. Thanks for staying extra on today. Lots of fear and panic today. We're all on our toes. Again, if you don't have a good setup, don't trade it. I'll buy pizza instead of ARC. Why don't you buy pizzas for the SEC? Tesla 69. There goes your Tesla viewers. People were pissed at me the other day. They've stopped showing up to Tesla viewers. Look, it's still tradable. I don't know why everybody's so got their panties in a bunch about Elon. Like Elon's walks on water. Elon, if you go, I'm not even going to get started again. But separate the person from the stock. Buybacks to pump the stocks. All right, stock dumps and the company buys super cheap and then CEO gets more shares higher. I can see it being buybacks are definitely abused. I just want to know how it was lumped in together with the same thing. But look, if you don't want stock buybacks, change the friggin' rule. That's an easy one. I don't know how you're going to stop that abuse without specific enforcement. That enforcement is going to be really tough. Okay, I think they should just get rid of stock buybacks, except for specific things. If you file long-term form, you want to reduce your over long term, you want to reduce your outstanding shares, but then it has to be done over a series. That could be over a multi-year plan. You have to commit to a certain buyback over a multi-year plan. Okay, and CEO's compensation. You see, the other problem is CEO's compensations are based off stock price instead of corporate performance, and those two can be really uncoupled. Not to mention CEO's price being or compensation be based off of market cap. You want to clean up the stuff. You look, if you're a C title or an officer in a publicly traded company, you can't have compensation based off of stock price. That's just a part of being in a C title. You can get it. I don't know how you'd work it, but that's the problem. The markets have been gamified for quite a while, which is manipulate the stock price for compensation, which gets very interesting. It's been happening for years, and now they're finally wanting it. You're welcome. All right, I'm going to wrap this up. No, Ted, I'm not getting started. They love Elon. They think he's the savior of our humankind. He's just another billionaire. All right. Who bought the 19 QQQ put? 19 million, Pelosi or JPW? All right. With that, I'm going to wrap it up, everyone. We've had some fun today, putting some light spin on the. Now look, failed to open page. Look, now my heat map won't even open. The heat. That's how bad the market is. Look, the heat map won't open. The market's gone. It's gray page. It's gray page Thursday. It's over, guys. It's gray page Thursday. With that, you're all right, Walker. Are you keeping your same prediction? We can't even look at the heat map anymore. They've erased it. Maybe you're right. Now they're going to rally it. They've erased the heat map. Heat map broke, limit down. Gray page Thursday. There's what we're going to have to start off tomorrow with. Gray page Thursday. Close the markets. All right, that's a great way to wrap this up. I will talk to everyone in the morning. We'll see if there's any other short-term plays to be aware of for Thursday and Friday. And we will have a good time tomorrow. I'll talk to everyone then. Thanks for being here. You guys are all wonderful guys and girls, and however you identify, thank you for being here. Identify as a trader and investor with brains. Okay? That's how we identify here. We're the smart traders and investors. With that, I will talk to everyone later. Bye.